Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of July 28th, 2025. Let's get started. SEAF signals for this week. We got utilities, communication services, and industrials. This ends the run of technology, which had 11 on the trading week. Now, please note, technology is still favored, and one bad trading week, while in this case knocked it out of our signals for this week, is not necessarily a directional, complete directional change for technology. We'll look at that in a little bit. We'll also take a look at healthcare, which seemingly has the reverse of technology, with 11s in tactical month and strategic quarter, and 1 in the trading week. Take a look at utilities and communication services. Also note, we're not super highly ranked anywhere. So overall, trying to find leadership here. This might be a transition week. And moving on to our heat map. So key thing to note, I'm kind of interested in tracking. We haven't had a lot of days over 1% in for one day, or 1% positive or negative inflows or outflows. As we've been kind of tracking this, we're at 22 days in a row now. We also had a 28-day streak prior. So there was one day that we had a decent increase, and that was it. So we're almost at, 50 days now of trading on, under, or below. We've just really noticed that flows have not been incrementally increasing overall that quickly. Now they are going up. We're up 1.92% on the trading week for the last week. So we are seeing an increase in these flows, but it's been very soft, and really not seeing any flows in or out that are overly strong. Healthcare, 0.22% for the week. And that's an inflow, and for our technology, it's minus 0.34. So not either of them hitting our 0.4 threshold, which we've determined as kind of our significant mark. But overall, we can see here some kind of greens trickling in toward the bottom, some reds trickling up at the top. That tends to mean that we're in some kind of a transitionary period. Historically, utilities has been a defensive sector, as well as industrials. So kind of skewing a little bit toward defensive. Healthcare in general is defensive as well. But still seeing technology and communication services up at the top here. So again, in a little bit of an odd alignment for the SEAF model this week. Other things that I've been enjoying kind of showing off is this total sector spider AUM. Add up all the sector spiders AUM into one number. You get this chart up here at the top with the red 21-day moving average. Especially as of late, this has been really seemingly adhering to our chart. Down here has got a price versus SPY. So what we were able to miss when the AUM crossed down below the 21-day moving average, 10.64%. What we've gained since the AUM has moved above the 21-day moving average is 18.62%. As we can see here, we're really starting to run away, but we're coming up against this, calling it resistance is light, but a little bit, of a high water mark over the last year in terms of this AUM, but we are kind of starting to separate a little bit from this 21-day moving average as the asset flows have been creeping up. We're going to keep an eye on this, because if we start to see this turn down, we can potentially see what happens. There's some smaller spikes here where we've had a little bit of negative appreciation of price as we drop below the 21-day moving average. But as of right now, we still have a little bit of green light, even with our SEAF starting to realign itself a little bit. Technology. Wanted to highlight technology. Again, still in favored. We're still spending time, but we had a little bit of a pullback on the relative performance versus SPY. It'll be interesting to see what happens. Is this rebound? Is it another break? We do have tech earnings this week, so what we could be seeing is some managers locking in some profits ahead of earnings, just to try to avoid some of that volatility. So, this will be a kind of watch this space. I imagine some positive earnings calls from the big tech firms coming in this week. We could see this thing go back upper favored. Some muted earnings, we could middle here a little bit. Like I said, I don't like to project a little bit, but just trying to put some understanding to the numbers that we're seeing as we back down into the lower favored. Feeling it could be managers trying to just avoid the volatility for the upcoming earnings. Utilities coming up into mid-favored. Seeing a very slight relative outperformance trend, very much in a sideways pattern though, going back to last year. Would like to see some stronger flows out of utilities, 0.12 on the trading week, and kind of start to pick up a little bit more accumulation so we can get this relative outperformance part of the chart kind of roaring. But as of right now, this is a SEAF signal, 2 on the trading week, 3 on the tactical month. Has that nice positive bias that we like to see from strategic quarter, tactical month, the trading week, 5 to 3 to 2. I'll show that real quick here. I really like this positive bias. Apologies, I got a gnat that's my best friend today coming in. So we'll see. I'd like to see some stronger flows for utilities, but we are definitely trending in the right direction. Industrials. Industrials is continuing to have a nice little relative outperformance run. We've had these nice peaks into favored, and we're getting a little bit of sustained favored here. Now we're coming up on a little bit of resistance on the relative performance versus SPY part of the chart, but still it's the number 2 on the model. It is a SEAF signal, and this sustained time in favored is always good. So nice uptrend in the relative performance versus SPY, sitting in nice favored. Again, I would like to see some stronger flows coming out of industrials. It's a little bit in that reverse. It's a 5, 4, 3 if we're looking at the scores, 5 to 4 to 3. Would like to see a little bit of rebounding or a higher score next week in the trading week, but overall, a nice place to be for industrials. Communication services. Communication services comes in. It is the lowest of the 3 SEAF signals, just kind of coming into favor. We have been trading in a bit of a box in terms of its relative performance versus SPY going back to January, so for most of this year. Again, a little bit softer flows this week in our top 3 for the top 3. Overall weaker scores. We are not seeing that really strong relative outperformance like we had seen with technology going back for the last couple of weeks. The SEAF model does this sometimes. You have to try to find where the money is going. If the money is not super strong in any one time period, it is going to put you in a position where the most amount of inflows are coming, and it's not always going to be a technology type move where you're seeing these giant swings in relative outperformance. It is just putting you in a position to be where the money is going. That doesn't necessarily always result in strong relative outperformance, but a lot of the times it does, which is why the model has performed well going back the last 6-7 years. But it puts you in a position to get where the money's going. Right now, the money is currently going into communication services a little bit softer, but we're in a soft flow environment right now. So, watch this space for communication services. Last but not least, healthcare. Healthcare came in strong on the trading week. Like I said, it was a 0.22%, so it wasn't that rip-roaring flows that we like to see, but it was something to look at. Again, this is a watcher space. We're still in a void. We have a little bit of relative outperformance, but this thing has been trending negatively going back, in this chart, going back the last calendar year, but I think it extends even further out to that. Little spurts of relative outperformance. Healthcare has been at the bottom for quite a while for us. It moved itself up 2 spots with this trading week. Watch the space. We accumulate a couple of 2-3 weeks in a row where we really start to see flows coming in. We will shoot through this neutral up into favored, and we might, could potentially see some relative outperformance here on the bottom part of this chart. There is nothing to do yet here. 1 week of strong flows does not create a trend, and what we're really trying to do with this model is see the momentum of flows over several time periods to really establish a strong trend. So watch healthcare, watch this space. We string a couple of these trading weeks together and we can shoot up into favored. We will see some relative outperformance, but nothing to do here yet. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.